Today is Tuesday, April 1st, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. Today we did see a slight miss on job openings. It came in at 7.6 million when the street was expecting 7.7. 7.6 million is definitely still a healthy number, but when these reports come out once a month and they continue to show year-over-year declines, that's showing a decelerating labor market, which points to a weaker economy, which is definitely what everyone's worried about right now. We certainly have a few big days coming up. On Wednesday, we're going to have the ADP employment report, Thursday, initial jobless claims, and then on Friday, the employment, unemployment, and then the hourly wages as well. The only positive that these numbers coming in lower would really generate, it could potentially push Jerome Powell to cut the federal funds rate more than twice. Goldman Sachs did just revise their 12-month outlook for a US recession from 20% up to 35%, and they also see a higher probability for there being 3 rate cuts this year instead of only 2. The only problem with that is that if the markets start to price in a 3rd rate cut, and then at some point this year Jerome Powell reiterates that there's only going to be 2, that's going to create sharp market declines. So if the rest of this week plays out and we end up getting bad numbers and the markets for some reason rise on the anticipation of a 3rd rate cut, and just know that the next Fed meeting is the first week in May, and then at that meeting he said that they're still only anticipating 2 rate cuts, we could very well end up right back where we are right now. We'll take a look at how the SPY chart looked on Friday. You can see by the SPY price being below the 5-day, which was also below the 15, there was definitely a lot to be nervous about in the markets. It was able to close just above this longer term green trend line, and it also seemed like it was going to be heading straight through this red support level. And we talked about in the last update how the next support level was quite a bit of ways away, so it definitely wouldn't have been good to cross below it. And we'll see that on Monday it was able to have a positive day, and luckily was able to tack on another positive day today. The SPY price did close just a notch below the 5-day, and it's definitely encouraging that we're getting some separation from the red support level. Another sign of encouragement as well is that the MACD is still above the signal line. At this point in the market cycle, I think it's super important to be looking out for higher lows. We'll see how tomorrow goes, but for now it looks like we've already started that trend. Markets are obviously going to have down days, but as long as we can string together a few more positive days than red days and create higher lows in the process, we should be back on track in no time. These are going to be all 14 of my current positions. Right now, Meta, Nvidia, Microsoft, Costco, and PayPal make out my top 5, and those account for 54.31% of my portfolio. For now, I have kept my portfolio exactly the same, but I do feel like over the next week or two, I am going to start making some changes, and I'll be sure to give updates whenever that does happen. Right now, I do have 94.81% of my portfolio invested, which means I have 5.19% sitting in cash. Since Monday, Pershing Square had a loss of 0.72%, my portfolio had a gain of 0.56, and the S&P 500 had a gain of 0.95, which brings us year to date. Pershing Square is at a gain of 0.51, my portfolio is at a loss of 3.78, and the S&P 500 is at a loss of 4.01. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.